thank everybody for taking the time to be on the call today. As always, our goal today is to provide you with a concept that you can implement into your business to really expand your opportunities and hopefully increase your revenue significantly. Specifically, we're going to discuss entering the business planning market. We know that your job's difficult, and definitely expanding into a new market can be a daunting task. So today we're going to share a tool with you that many of our advisors have found helpful for opening these new opportunities in the business planning market. I want to start, though, by sharing a story with you that I think is directly relevant to the valuable planning that insurance advisors can provide to business owners. So about 5 years ago, I got called for jury duty, and I actually ended up getting selected as a juror for the trial. In this specific case, there was an elderly lady that had inherited a business from her late husband, and she was accusing, she had brought a case against one of her husband's key employees and accusing that employee of intentionally running the business into the ground after his death. The business had failed at this point. The key employee, on the other hand, his defense was that it was actually this new owner's mismanagement of the business due to her inexperience that was causing problems. So regardless of the outcome of this trial, at least 3 things had happened relatively shortly after this business owner's death that he would have hated. 1, his business had failed. 2, his wife had lost probably the biggest asset that he had passed on to her. And 3, his wife and key employee were involved in a lawsuit. It was just a bad situation all around. So what I want to bring out is all of this could have been avoided with some proper business planning, which is where you, as the advisor, come in. You could have set up a buy-sell agreement between the owner and the key employee, funded it with life insurance policy on the owner's life, and then when he passed away, the key employee would have had the funds to buy the business from the owner's wife. He could have continued running the business successfully, and the wife would have received the fair market value of the business in cash, tax-free. This is a huge benefit that you can offer to your business owner clients. The question then becomes, how do you open the conversation? So we're going to talk about that today. First of all, I want to start with some general business market facts. 5.7 million. This is the number of business owners with employees in the United States. 25% of them are considered affluent. 84% of business owners polled said that they know they need to do succession or retirement planning, but they haven't done it. They know they need it, but they just haven't started the process on their own. They need advice. And 10.4 trillion with a T, this is the number of wealth that is expected to pass between generations between now and 2040. So why do I bring all this up? Because for you, as the advisor, it means that there are huge opportunities for you. A lot of opportunities to make, to provide real value to a business owner, to expand your practice, and really help these people transfer wealth and accumulate wealth for their own retirement and keep their businesses viable. So obviously, there's new sales opportunities. In the business market, what we see typically, a lot of buy-sell planning opportunities. You know, there's a lot of fancy names for different buy-sell plans, but in the end, it's all a pretty simple concept to implement. Key person planning, we see a lot of that. We're doing a good bit of supplemental retirement income planning. All of these are opportunities individually that I'd love to talk to you about if you have a client that could fit. Another opportunity really is for higher commissions. Principal, one of our carriers, reports that their business cases average almost 50% higher in commission than their normal cases. So you're giving yourself a huge raise. Gives you an opportunity to meet your client's needs, and really at the Milner Group, we want you to become a trusted advisor, to deepen relationships with your clients. There's a statistic that over an insured's lifetime, over a client's lifetime, they'll buy insurance 7 different times from 6 different advisors. Okay? So what that tells us is that there's a huge disconnect between these relationships. a client is just going to go to the next person that is in touch with them, unless you do something to deepen that relationship with the person and really add value to what you're doing. And that, over time, will really lead to a lot more business. So what's the need for business planning? Why does a business owner need what you have to bring to the table? First of all, when we're talking about structuring or funding a buy-sell agreement, knowing the value of your business is essential. And it can help to create a market for the business when an owner exits. A lot of business owners, I've gone through a lot of these, a lot of business valuations with business owners, with our advisors, and a lot of the business owners don't really have a market for their business. They have no idea who they're going to sell it to, what it's worth, or really how they're going to pass it on. That's a real issue. So having a buy-sell plan will create a market. If you have multiple owners, it can minimize discord among them because you have a plan in place about exactly what's going to happen. You've all agreed upon it, and you have money in place, a plan in place to make it happen when you pass away. It's going to prevent unwanted transfers. This is a big deal. Okay, so say that you're in business with two other people. All three of you are very into the business. You all add value to it. You know what you're doing. What happens if one of you passes away? The business goes to that owner's wife or kid who has no idea of anything about how to run that business. You are now in business with that person, and that really can cause issues. So preventing unwanted transfers is a big deal. Here's one. It can fix the value of the business for estate tax purposes. Okay, so if you're transferring this business, as long as you set up the buy-sell agreement properly, of course the attorney would be setting that up, but as long as it's set up correctly, this can actually give a value to the business that is held up for estate tax purposes. That's a big deal for a business owner. It provides liquidity for the family to maintain their standard of living. Of course, that's going to be a big deal. And it potentially opens the discussion for retirement income funding and other types of plans. Specifically, you can look at protecting the business with key person insurance. That's an opportunity we often see. You want to look at maybe retaining key employees, maybe with an executive bonus type plan. You might want to set up a supplementary retirement plan for the owner, something that can allow discriminatory contributions. Maybe the owner already has a plan set up that he's contributing to for his employees. He wants to put more away for himself and wants to know how he can do that without having to give a ton of extra money to his employees at the same time. You can help with all of this. So what's the challenge you face primarily when confronting or trying to open an opportunity with a new business owner? Business owners are probably your top clients if they're already your clients, okay? So you don't want to mess up that relationship by talking about something you're unfamiliar with. There's usually a lot of competition. You have a successful business owner, you're probably not the only person around that would like to set up some sort of plan for them. So how do you stick out? How do you provide more value? Business solutions might not be your specialty. There's nothing worse than trying to talk about something complicated to somebody who you feel is very intelligent and you feel like you couldn't answer a question if it was asked to you. That's very daunting, I understand. You don't want to risk other business you may already have in place. If you're a property and casualty or a health agent, you don't want to lose that group business that you've got because you push something that maybe that business owner doesn't need. A big one that we're going to talk about, how to start the conversation. How do you start a conversation about a buy-sell agreement or setting up a key person plan? What we're having success with, what our advisors are having success with, and we've gone through a lot of these at this point, we've been doing this for several years now, using a tool that Principal provides to us. It's their business planning services, okay? There's a fact finder and just a little bit of information you have to get. They will do business valuations for us. They'll do a buy-sell review if that's something that is on the table. The client already has a buy-sell in place, but maybe it needs to be reviewed. Business continuation proposals. It helps you to sort the business priorities as well. The business owner might say, yeah, retaining key employees, that's something that really I'm concerned about, or I'm not sure that I really am setting aside enough retirement money for myself. How could I do that better? Okay, so this tool allows you to add value right at the beginning of the conversation, and really also helps you to uncover opportunities that the business owner may not have thought of and you may not have thought of as well. Business valuation services, by the way, if a business owner were to go get his business valued professionally, that is a huge cost, okay? That could easily be $10,000 or more to have that valuation done. And you're getting it done for free through this service we have with Principal. So that's a huge value add right there, right at the beginning. How does it work? So we have a fact finder. As you can see, it's right here. Very simple one-page thing you can fill out with the business owner. Okay, you're going to fill that out. Very simple. Then you're going to obtain 3 years of tax returns or balance sheets. Okay, hopefully you can get your hands on those. You submit that to me, and then within 5 to 7 business days, I can have Principal put a report together for us that gives a business valuation and gives recommendations about possible buy-sell arrangements, all that kind of stuff. Very simple process. They have CPAs at Principal that put this stuff together. It's very professional. Principal they regularly send out some of their valuations to a professional valuation firm to have their valuation tested against what this firm would do. They find that their valuation process is incredibly accurate. Okay, even though it's a free service they're providing, it's not to be taken lightly. It's very accurate, very useful. So what's it look like? There's a lot of pages and stuff in there, but here's kind of the meat of it. It's going to give you business valuation with 5 different methods of valuation, and they don't expect us to come up with what we think is the best valuation method. They're going to look at what business this person is in, and they're going to give us a recommendation as to the most appropriate method. So they're going to use all these methods because they're all commonly used, but they're going to say, you know what, based on this business that they're in, the most appropriate method to use is the discounted future earnings method or the capitalization of earnings method. They'll tell us why, and they'll tell us which one we should use. So what do you do? What kind of results are we having from this? So typically what happens is, what we've seen is your client is going to need either a buy-sell agreement established, or they may need new funding for their existing plan. Some business owners actually have buy-sell agreements in place but haven't funded them. That's a bad situation to be in. We had a big one recently where these business owners had a huge obligation that they tied themselves to legally with this agreement, but they had not funded it. Okay, that's a big liability that they're set up for if they don't have funding. Also, a lot of times if they do have funding, it really needs to be reviewed probably every 5 years at least to see if the funding amount is still appropriate. So just because somebody has a plan in place, that may actually be better for you than if they didn't have one in place. You may, because they've already agreed that it's a good concept and they need it, but there's a really good chance that you need to review it for them. Key person insurance is often considered, okay? But what you're going to run into is that most often, pretty much most of the time, the business is not worth really what the owner thought. It's going to either be overvalued, which is a somewhat harder conversation to have, but still lots of opportunity there, and the undervalued business. Easier to talk about, but really there's opportunities in either situation, and I'm going to talk about that. So the business owner thought the business was worth more than the principal thinks it's worth. Then valuation really says that it's worth. What do you do? So you know that the business probably represents one of the owner's most significant retirement resources. So if it's worth less than they thought, suddenly they probably have a good bit less money in retirement potentially. Maybe they need to put, if you manage money, maybe it's an opportunity for them to put additional money in a qualified plan. A lot of times that's really not going to be an option, maybe not one that they want to pursue, even if it is. Something they might really like the idea of is a discriminatory retirement plan to catch up on their retirement. that could be an opportunity for you to set up a supplemental retirement income plan using life insurance. Okay, so there's a big opportunity there. What if their business was undervalued? There's a lot of things going on here. They're going to be concerned probably if they have a buy-sell agreement or they're talking about setting one up, that will my partners or my family members end up being shortchanged in this? Well, if so, maybe they need to purchase more insurance to cover themselves, maybe amend their buy-sell agreement accordingly. And how does the business owner make sure the business keeps this high value? Well, there's probably some key employees involved that are really driving that, okay? So that would be an opportunity for you to talk about key person insurance. What do you do if that person passes away? You need something so you can bring in somebody immediately that can fill that person's shoes. You probably want to think about providing incentives to keep these people, maybe an executive bonus type plan. Again, executive bonus, Section 162, sounds complicated, but in reality, it's actually fairly simple, and I can definitely walk you through, at Milner, we can walk you through how to do that. So there's opportunities in either scenario, overvalued or undervalued. Milner can help, okay? So we can set up conference calls with the principal CPA, put their reports together. I don't expect to give you this report and then you to get on the phone with your client, set up an appointment, and just immediately be ready to go through this thing and be totally confident about what you're going to do. No, we can get a call together, and you can talk with us, you can talk with principal about what this report is telling you and what opportunities there's going to be. So you're completely ready to go. I can do a conference call between you and the client, okay? Michael can do a conference call with you and the client. So if you want somebody on the phone that's kind of, in case you get that question that you're not sure of, okay, there's always that possibility. We're here to help, and we can answer that question for you. So we are happy to do conference calls with you and your client. We are here to help, okay? What I would love is any of your clients that came to your mind during this presentation, just go ahead and write them down so you don't forget about this opportunity, and start calling one a week. If you can do that, our experience shows that you will start generating new sales. So we're excited about this tool that we have with Principal, and we really hope that you'll start to implement in your practice, because it is opening opportunities in the business owner marketplace. All right, if you've got any questions, please feel free to type them into the chat bar, and Michael will read those out, and I would be happy to answer them.
Thank you, Jake. I'll just wait to see if we have any questions. All right, I don't see any questions, so with that, we'll thank you for joining us this month. We hope that you will plan to join us again next month. August the 25th at 10 a.m. will be our next webinar in the Retirement University series. We want to continue to bring you valuable ideas that we think will drive revenue. One last mention, using the Principal program, their study says if you do one of these per month and continue discussions with your clients and are no better than national average, you will make an extra $50,000 over the course of the year. We would love to see you make an extra $50,000. So we hope that you will take these tools we talked about today, ask us questions, and use them to try to drive some new business. So thanks very much, and we look forward to seeing you next month.